The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the September 30th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you now make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Well, any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices trading to the upside. The Dow is up 440, S&P 39, and NASDAQ 100 up 122. Spot volatility trading now at 25.52, well below the 50-day exponential moving average. That says lots of liquidity in the marketplace out here. Gold's off $7, silver down 69 cents. Light sweet crude trading out at 39.82. That's up 50 cents, about 1.5% to the upside. So let's dig right in to the markets. Let's look for the ES Mini has been providing the best signal. So let's just, in the short-term time frame chart, that is the 30-minute time frame chart. So let's go take a look at it. And this way we can help understand what the market is doing. Now, how many of you were watching the debate last night? The fireworks didn't end until the debate was over, the fireworks in the market. Now, at the bar that began, we had a TD9 count that formed at 10:30 last evening. This you're looking at the and there was also an A to B equals CD. I can't draw it in on here, but you can see the TD9 count, and so price starts moving lower. Right, you got the topping signal. Price starts moving lower. What does it do this morning? Well, at 2:30 it bottoms with another TD9 count out there. In fact, then a couple hours later, this was at 5:30 in the morning. We get a nice Rhodes momentum indicator signal out here. So the market was already communicating to us. So as the market, you woke up, you saw futures were trading lower. Maybe you were up, up till 11:30 midnight or what have you. And you saw the couple 100-point gain, 200-300-point gain given away or what have you. But if you didn't have the pattern recognition tools out here, you wouldn't have really understood what was going on. You might have said, hey, it was because of X or what have you. Remember, we can't really hover over any bar and understand what was going on at exactly that time. These patterns just simply work. Now, what took place, what has taken place, is we had another TD9 pattern. This completed at 10:30 this morning. It was the bar following bar number 9 out there, and that lasted for a half an hour. In fact, you had a little shooting star. By 11 o'clock, look like, okay, this is pretty good. This might work. But then on that following bar out here at 11:30, price closed above that level. Now, it closed above that level negates that TD9 count pattern. And it tells us of a real strong momentum move. Now, at the same time it's doing that, the other thing we need to take a look at, we can see that Stevie's green-red line, the price oscillator on change line, my apology, changed color, and that was at 10 o'clock. And that tells us to anticipate that price and that line are going to catch up to each other. We don't know how that's going to happen, sideways move, pulling back, but that's what we should expect right now. That's normal here. So the pullback the message is not, at least at this stage of the game, the message is somebody might be saying to themselves, look at that. Dow is up 500 points and it's already given back 60 points or something like that in short order out here. You've got to expect this. So what I want you to be watching, I want you to have the oscillator and change line on your screen out here. I want you to be, right now, that's priced at about 33.54. And if it's a test and rejection of that and you're still short the marketplace, that's not the signal that the charts at least are sending to us. So what we're seeing here in the marketplace, we can go take a look at, and we will go take a look at the other 30-minute time frame chart. It's the normal aspect involved with, and I can't tell you why, not because I can't tell you why, but because I can't tell you why out there. I just know that it's a phenomena that takes place out here. And so if we take a look at the NQ, and we look at the NQ forms a nice TD9 count bottom. Yesterday, 2:30, Rhodes momentum indicator bottom signal at 6 o'clock this morning. Now we can see it's got a brand new profile. Support out here is at 11,406. We can see prices pulling back to Stevie's green line. Now, if price closes below that, it says we have a further retracement. But we don't know whether that will happen or not out here. But right now, what's the phenomena that is going on was something that was signaled to us at 10:30. At least in the NQ, to anticipate that. Doesn't tell us when. Well, now we can see that now is the so-called when. But it's really going to be all about the end-of-day closeout here. And it really isn't going to be about the 30-minute time frame charts. You and I are just using a 30-minute time frame chart because it is communicating the story of the market to us. That's all that each of us do. That's all I do here each day is just simply, I don't really interpret the market. Because the market, I'm just narrating the market. We're using the exact same tools. It doesn't matter whether it's a 2-minute, a 5-minute, a monthly, a quarterly, a yearly. We use them the same way because they generate the same type of information. Of course, you're going to have a different view on a 30-minute time frame chart with regard to what the market is doing than you will on a daily. So speaking of daily, what you're going to want to be watching for, and I'm going to go to the more conservative numbers out here, which means I'm going to use my composite contract. And so for the ES Mini, and in this case here, I think that's one and the same, 33.53. The ES Mini closes above 33.53. No guarantee that it will, but you have the number to be watching. Two things. If it closes above it, that's above resistance, tells you that you should see higher price. Higher price would be to where? 34.17, the top of the weekly profile out there. What happens if price closes below 33.53? Well, one, we would know you've got that strong resistance out there, the top of that daily profile inside the ES Mini, and it will not be signaling any kind of a breakout. So it's really the 30-minute chart's helping us to navigate, understand the pages in the chapter, so to speak, of the story. So everything that is unfolding right now, it is normal, it is natural. You go back and rewind the hour shows that we do, and you hear me when we see that line change color, we know what to anticipate. No different for any different time frame out here. So now that we know what's going on short term, 33.53 is going to be the key number to watch. That's in the ES Mini. Inside the NQ, the key number to watch is going to be 11,450. If price closes below 11,450.75, top of its daily bearish structured profile will have held, tells us there's strong resistance. We do know bulls are trying to push through it. And if they do push through it, close above 11,450, the signal from the NQ is that it wants to go target 11,802. Inside the Dow, the number to be watching out here. Inside the Dow, that number is going to be 27,513. That would be one heck of a pullback. Or, hey, we know it can do it in 10 minutes time out here, but watch 27,513. A close above 27,513 for the Dow says 28,401 is next up on its charts. So that's what to be. Those are the numbers to be watching inside the equity futures contract. Again, we've seen the market give back some of its gains, but you knew to anticipate it based upon the signals coming from the 30-minute charts for the ES, the NQ, the Dow, and the Russell 2000.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. I can't recall. I think I might have said it during the 1 p.m. update, and there was a question here from Jimmy inside the Tiger's Den about the two-day knee-jerk or two-bar knee-jerk reaction out here. So let me try to clarify this for you, Jimmy, and everybody else that's out here. We're taking a look at now I've got the continuous contract up here. The reason is on this white background chart because I can grab enough data and we can go take a look at it. So typically in a bull market, so let's simply take a look at the move off of the March bottom out here. And we're looking at a weekly time frame chart. When we have just a knee-jerk reaction retracement, so to speak, I don't know how else to put it out here, it typically lasts for a period of 2. It's really 2 to 4, but the most common would be a 2-bar. 2 bars, 3 bar, 4 bar. You don't see anything beyond, typically you don't see anything beyond bar number 4, daily, weekly, or what have you, if it's just a counter trend move out here. So in this case, we're looking at the bull market from the March low going up into the highs out here, the most recent high. And you'll see, let me get my crosshair out here. You'll see that this is measuring, it's comparing each week compared to the prior week. So it's going to, if we're just really looking at the red numbers out here versus the move higher. Just want to take a look at these corrections out here because the opposite is what takes place. And so here you can see the week of April 24th was a lower close than the prior week, and then we had a lower close on the week of May 1st out here, a slightly lower close out there. There's your 2-bar knee-jerk reaction to the downside. The next one that we had was July 17th and July 24th out here. Now, the one that we just recently went through was a 3-bar. Now, I'd have to change this to 3 bars, but you can just see that the close here the week of September 18th was a lower close than the week before. So is this part of the hard thing to figure out here, Jimmy, is was that just a 3-bar knee-jerk reaction low? So that means what you and I have to do here is we have to really be aware of support and resistance areas. Now, if this is the beginning of a bear market, a new bear market, one that could last a couple of years out there, and that is a possibility. If this is, what we should see is a 2-week knee-jerk reaction move to the upside. And you can see that price is trading right on Stevie's. I can't tell you whether it's green or red. I went to a different tool here so that as I change time frames, I don't have to worry about my multi-time frame tool out here. That's where I've got it painted in different colors. So we should have some more information next week. But if the NQ is going to find resistance, really it's right here, but this is a weekly time frame. So on Wednesday, it's very hard to make that call. But if we do get a close above that red line out there, something to think about. So there's the possibility. But these 2-bar knee-jerk reactions, they're very helpful in helping us understand what's going on. Here, if we switch over to the daily time frame, let's do that out here. Daily chart. Give us a moment to populate. Here we can see the two. Here we see it in reverse now. So the move off of the highs out here from back in September 2nd, September 3rd out here. Our first 2-bar. This is the daily time frame near jerk reaction, September 14th and the 15th. Then we get another one on September 21st and the 22nd. Then we get what amounted to a 3-day. This most recent one off of the 924 bottom. We went up 3 days. Then we had a pullback, a little bit of a pullback yesterday out here. With today trading above that level out here, you know what it's telling us, Jimmy? And maybe not so fast on this just being a 2-day, 2-bar, 3-bar knee-jerk reaction. It's looking potentially like something else out here, but we'll have a better feel at the end of the trading session. We're going to watch inside the NQ whether or not price is able to close above resistance. And again, resistance out here is 11,450.75. So I hope that helps you out, at least with regard to clarifying that question. If we go take a look at the Brent from Martinez, California, wanted to take a look at the spot volatility index, was pointing out that the spot volatility index is trading below its 50-day exponential moving average. And yes, this is day number 4, bar number 4, day number 4, as Brent was pointing out. That first close was September 25th. The close was 28.51. Whoops, I'm sorry. September 25th. The close was 26.38. The moving average number 26.71. So just slightly below, but still below it. 2 days, 3 days, 2 days ago, the close was, let me get the box over here so I can actually read it. Sorry about that. The close was 26.19. The 50-day was 26.69. Yesterday, the close 26.27. 50-day 26.68. We're trading below it right now. Now, this we exclusively use for the S&P 500 or the ES Mini out here. Now, when price is trading below the 50-day exponential moving average, generally speaking, you want to be the market. What the S&P 500 is going to do is move sideways to higher. And this chart here just takes a look at how the S&P 500 trades when the spot volatility is above or below the 50-day exponential moving average. We don't need to cover this. We cover it ad nauseum. You can do the work. This is the simplest thing, simplest tool out there, and it's very helpful with regard to your trading. So that's why we really pay attention to the VIX. Now, what Brent probably was going to say and suggest out here is going to say, Steve-O, and I know Brent was going to say Steve-O. How do I know that? I just, it's amazing, the skill set that I don't have. But probably what Brent was going to say, you know what, Steve-O, with the spot volatility trading below its 50-day exponential moving average for 4 days in a row, I'll bet you its price target is that lower Bollinger Band, that 50 to 1, not your normal Bollinger Band reading out there, not your grandmother's Bollinger Band, but instead Stevie's version. And so the settings are 50 to 1. And Brent, I would agree with you. That says the price target becomes a 22.51 level. We're at 25.49. If that's the case, then the message that's coming from the ES Mini right now, as long as it does close above the top of that daily profile, which is out at 33.53, then that signal to you and I, Brent, just to the two of us, so everybody else, don't listen, okay, would be that the ES Mini wants to trade up to 34.17. Of course, Brent, as you know, we have to wait till the end of the day to be able to make that call. But as of 1:25 in the afternoon, that is the message. I think once we see price and the oscillator and change lines test each other, that will give us the real clue. And the NQ looks like it's probably going to be the first one to accomplish that task out there. But that will be helpful in really generating the signals. And you got to anticipate if we do get those closes above profile levels in the spot volatility and the spot volatility is trading below the 50-day exponential moving average, that the message is clear and that price wants to continue to move higher. So we'll just have to come back to it tomorrow or certainly at the end of the trading session out here. Let me see if we've got any requests out here by email. Doesn't look like it at this stage of the game. Oh, I need to get to the ones at steve@tfnn.com. That would be helpful. There we go. So, yeah, I've got a couple here. So first one comes in from Tim B. And Tim B says, I covered my shorts, but it looks to me like SOXL and SMH just made a double top. Are you thinking they continue to go higher? So let's go take a look at the semiconductor index itself out there. That'll give us a very clear picture of what's going on for Tim. And so give me just a moment to pull that. And what we're going to really be looking for, Tim, what I'm interested in is where's price trading relationship to its oscillator unchanged line. And as we open it up, we're going to see it's above the oscillator unchanged line. And Tim, here's the real key. Yesterday was a shooting star. Didn't complete a pattern, but it did tell us where the next resistance level was. And if the semis can close above 2261.56, it's bullish no matter how you look at it. We'll be back to finish off this message or this review with Tim in just a few minutes. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We were taking a look at the semiconductor index, the SOX index out here, even though Tim was asking about the ETFs, the SMH, SOXS, SOXL. We're going to get our better signals by taking a look at the indices. So you had mentioned a double top out here. Now, and just take a look at the SOX, Tim, if I was going to look, where's that double top? It would have been at 2235.79. It would have been from this high right here. So I don't know. It would, and again, I haven't looked at the SMH chart or anything, but it would have been the September 16th high. And a couple of days ago, price closed basically just slightly above that. Same. Yesterday was closed above it, a shooting star candle. Now, I don't know if you're referring to yesterday as a so-called kind of a double top. You don't use yesterday's candle. If that's what you're doing, you're probably not. And the chart probably looks different on those ETF structures out there. But yesterday's candle is just yesterday's candle. Now, I had mentioned that yesterday's candle was a shooting star. And a shooting star is the opposite of a hammer candle, so that can identify a top. The reality of it is that candles don't mean anything unless they're associated with a pattern. They're interesting. They tell you what the buyers and sellers were thinking about that session out here. But for example, if you just traded every hammer, as soon as you saw a hammer candle, you went long, you'd have your tuchus handed to you. How do I know that? I tested it. It seemed like, as I started learning about Japanese candlesticks, I'm like, hey, this is a cool candlestick. Why don't I just write a program that seeks out every hammer candle as soon as it sees it, boom. We're long, we're out of here. Yeah, you don't want to do that. Nor do you want to say you get a shooting star and we're going to head south out here. Now, it does set up a resistance level. So what I was suggesting to you, Tim, is that if you see a close above yesterday's high, a miniature resistance level out there, and that's 2261.56, it's telling you that price wants to move higher. Quite frankly, what's being communicated to us is price wants to move higher in the semis right now. As long as price stays above Stevie's green line, we have a rising price oscillator above zero. We're above prior swing points out there. And that says, yeah, you could go ahead and make a run for the highs versus the hills out there. So I hope that helps you out, Tim. Thanks so much for writing in and asking that question out there. Let's go to the next question that came in. This one coming in from Hector. Hector and the fuel injectors. That would be Patty. And happy Wacky Wednesday. Why would a stimulus bill passage force the gold market up? I don't think that the stimulus bill is what was forcing the gold market up. Well, Steve-O, how can you prove that? Don't you like the conversation I can have with somebody who sends in an email out there? Probably not. But let's go take a look at what Stevie was trying to really communicate out here. Let's go take a look at gold. The question is, from Hector, is it the stimulus bill that pushed gold higher? My contention is we're going to go find out that we knew something way before any discussion about a stimulus bill. It probably has something to do with Stevie's green line. So let's go take a look at it. Remember, we began the show understanding what was going on a 30-minute time frame out there. And that what we were seeing take place in the market was normal and natural. The same thing on a daily basis here, Hector and Patty, when we take a look at gold. So yesterday we talked about this a bit. And when Stevie's green and red line changes color out there, we almost get a stalling. It's not a guarantee for a stalling, but it is telling us about the end of a move. Why is it telling us about the end of the current move out there? Because there's a test that has to be formed. I'm not the one who wrote the rules. I just simply studied the charts and realized that there were rules out there and said, well, this is very helpful to us. So, Hector, that line changed color on September 24th. And I know you were listening to the opening of the show out here, and we're taking a look at each of the 30-minute equity futures contracts. So based upon what we shared there, remember, I'm really agnostic to the symbol, to the instrument we're looking at. This happens to be gold. It wouldn't matter on this chart what it was. We're agnostic to the time frame. It really doesn't matter what it is from a time frame standpoint. The tools are going to work the same. They will give us different messages for different time frames. Here on the daily time frame, Hector, what I'm sharing with you is since the date of September 24th, that was 4 days ago, so it's 5 days ago, we're taking a look at out here. The message was that gold, we should expect gold to rally up to Stevie's red line. That's at 1912.10. Now, it hasn't hit that yet, But if gold does hit that and rejects that, that's bearish. That is a bearish signal. Why is it bearish? Because it then tells us we have a falling price oscillator below zero. There's nothing more bearish than a falling price oscillator below zero. You've got to be aware of where support is at or any patterns that are out there, but we always have to be aware of where support is at. So where is support on the gold contract? Well, it's right now with regard to its TD breakout support, 1831 would be the number. So what we are seeing transpire here inside of gold is not the signal of the beginning of a new rally. It's not a signal that the move lower is over. It's the signal that its oscillator and change line changes color, and the phenomena associated with that is we're going to see price and that line catch up to each other. And I don't know what that signal is then going to be. I know that if one was short gold and you then saw the line change color, and then really a few days ago and you saw a bullish engulfing candle out there, just the buyers signaling to us that, okay, Steve-O, we want to go make that test. We want to go test that red line. Again, priced at 1912 out there. So I don't believe that it's the stimulus bill that is really what is driving gold higher. But if you're going to ask me, the normal conclusion that people would make out here, and I don't know if you were just baiting me out here. I mean this in a nice way, too, Hector. Is the normal feedback that you would hear from folks is, they're just printing money and gold has to move higher. Folks, if there's one thing that each of us have learned, since 2008 is what? That all those prognosticators telling us about if you print money, gold's got to go to the moon. Those people don't know Jack. Now, I'm not sure Jack's name, but they don't know Jack, if you know what I mean out here. Because we've been printing money like it's going out of style. Or maybe that it's in style out here. And have you seen gold go to the moon? That's not how it works, folks. So the printing of money, don't get caught up into that. That's not what happens. If gold's going up for any reason today, it has nothing to do with stimulus. It has to do with that horror show from last night, the train wreck from last night out there. What was the train wreck? That we've got two political parties that no matter what are not going to get together, and then you get a loss of confidence. When you have a loss of confidence inside a market, that will then start to send metals higher and so forth. But that's not what we even have going on out there. Just having a little fun, so to speak. It's really just simply the phenomena associated with Stevie's green and black line out there. So for those folks, anybody, the next person who tells you that gold and silver is headed higher because we're printing money, please send them over to Fred. Forget Jack. They don't know Fred, the Federal Reserve. Take them to the Fred St. Louis notes out there. Go take a look at the modern monetary theory, just print money, see how much the balance sheet has increased in the Federal Reserve, and say, well, why isn't gold at it should be? You want to know what it should be at today based upon all that printing of money? We can go back there and figure it out. But it's probably around 25,000 or so. What's gold at? Oh, in 25,000, that's probably a real number, folks. I mean, a real number. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, I have another expression out here. This is the one that I truly live by, and you'll find that it's true of yourself and certainly the others that are in your life. And that is, the way you do anything is the way you do everything. Now, if you just think about that and you just watch different people or what have you, you'll be like, man, how did that guy come up with that one? But here's the reason why I was telling you that is, so the way I do anything is the way I do everything. I do not like to give out bad information. So what I did during that breakout there was just some quick math out here because I wanted to really give you the right number. So if you go back to 1975, I just picked out a year, 1975, the M1 in the money supply was about, I'm just looking on my screen out here, in 1975, M1 was about $274 billion. And if you go take a look at the report of M1 in the middle of September of this year, so just a couple of weeks ago, we're at $5.57 billion. So if you just take a look at that math, and then you go take a look at what gold was trading at back in 1974, use an approximation out there. Gold went from, I think, about 200 to 875, something in that range out there. If you just use the money supply aspect of it, okay, and say that's your inflation, then gold would be priced today at about $1,668. Not to be exact or anything, but $12,668 if we just use money supply as that. And where is gold trading? Nowhere near 12,000. So I was wrong about the 25,000 out there. But you now have the dead on balls accurate, and that comes from one of your favorite movies out there, Your Cousin Vinny. He's my cousin as well, and that's where gold should be trading. So where is it trading? It's not trading anywhere near that. It's 10% of that. Well, it's maybe about 14% of that number out there. So no. Printing money has nothing to do with gold going to the moon or anything along those lines out there. Okay, enough with that, but at least we cleared that up, and I've given you the exact figure. You can go do that math yourself. You come up with the same result. So let's go to our next question. This one coming in here from LB. And LB is looking to buy into WRTC on today's pullback. Can you give me some price targets? So WRTC right now, as we take a look at this, is Wrap Technologies. It's trading below the daily profile and hovering on trading below the weekly profile. So the real key level, LB, that you want to see this close above This week is going to be $6.84. You're at $6.79. Now, does that nickel going to make or break the deal here? Well, if you do close below the bottom of the profile, and then you get another close next week, so you have 2 bars, Stevie's 2-bar rule out here to be able to bust through support or resistance out here, and then that's saying you might have lower price. So we need to go look at our other charts out here to kind of see if there's any kind of signal for some type of pattern or bottom. When I take a look at the daily time frame out here, LB, we don't have it. If we look at today, so you mentioned today you wanted to buy today's pullback. What Stevie's charts are saying to you is, whoa, hold on a minute here. What yesterday, what 5 days ago did was a nice push up into Stevie's red line. Now, we've got that falling price oscillator below zero message out here. More likely than not, as long as price remains below the oscillator unchanged line, more likely than not, Lee, you're going to be able to pick this up at around $4.42 out here. So the daily chart is saying, not so fast. Wait for 442. Now, that's quite a ways down. You're at 679 right now, so that'd be quite a haircut. But there's no signal here on the daily time frame to suggest that you would get into this position. Granted, the weekly is pulled back to support, but when the weekly pulls back to level of support, what you like to see on a shorter term time frame, such as the daily, is some type of pattern that is completed, and we don't have that. The pattern inside of the daily is saying, don't do it, because it couldn't get above Stevie's red line out there. The weekly chart says, oh, you know what? We've got a TD9 count top. Price is below right now, just slightly below, as we covered, the bottom of that weekly profile. This is telling us if we do get a close, a nickel close even below the bottom of that profile, 469 is where price would be pulling back to. So we'd be looking for some type of bottoming pattern on the daily time frame if that were taking place. And then on the monthly time frame chart, I've got nothing out here, not enough data. So LB, the charts are communicating to you that at 1:47 in the afternoon, you don't have the signal to take a long position. Now, I can see maybe what you're looking at out here, which is slightly higher lows, but that's still not good enough. You got to see it close above Stevie's because it's below all kinds of resistance levels out here, or really all kinds of support levels is what I should say. Of course, it's above resistance. Old support perhaps becoming new resistance on the way up, but we don't have the on the way up message right now. So LB, I hope that helps you out, and thanks so much for writing in. No other questions that I see. Is there anything in the den that I can review for anyone? Well, let's go take a look at the U.S. dollar index out here. Again, why? Just because I happened to look over on my screen and I saw it. And what has the U.S. dollar index done in essence today? Just pulled back to Stevie's red line. That's all. It's not green. It's not red. It's got a nice Rhodes momentum indicator bottom out here that formed in the early part of September. A to B equals CD pattern that's underway. It's still underway because there's no bearish reversal candle. Very likely what the U.S. dollar index is doing is on its way up to 96.61. It's just pulling back to a normal level of support. That's what we see going on right now with the U.S. dollar index chart out here. Question, did AQST hold its long-term support? Let's go take a look at it. So AQST, and so you said long-term. So let's first see what kind of long-term support levels we can identify. Here we've got the daily and the weekly. This is a instrument hasn't been along long enough to get us profile information for the monthly chart, and that's Aquestive Therapeutics, I believe, is the name out here. So hold support. Holy shnikes. Look at that gap to the downside. It's below all kinds of support out there. Boston Dan. All kinds of support. Below the bottom of its daily profile in a gargantuan way, and below the bottom of its weekly profile in that same gargantuan way. So let's go take a look at AQST, see if there's anything else that we can find out here. So what else is going on in the daily time frame? On that move lower, that big gap to the downside, the suggestion here is that price is perhaps headed back to $1.55. Now, here's the more cool thing, Boston Dan. If we take a look at how this instrument made its top out here, what are we going to see? We're going to see wave number 7. That is letter G. You'll see, in fact, you'll see 3 Gs. You'll see 3 Gs out here. We don't really get 3 Gs too often. I'm using multiple different counts from different swing points out there, trying to standardize the Chapman wave count rules out there for my purposes. And so that's why we've got 3 letters. I've actually got a 4th one that floats at certain times out here. But you got 3 G. You got a hat trick. G. And then you got a Rhodes Momentum Indicator top that was confirmed out here on the trading day of September 15th. So it is as if holders of that stock knew something was going on. And look at that. You got that sell signal even on the next day when you had to close below Stevie's green line out there, and that was at the $8 level. I bet you those folks that are now sitting on the stock at $5 are saying, why didn't I know about the Chapman wave number 7, the Rhodes Momentum Indicator signal out here? And geez, where's Stevie's TD9 support level? It's at $1.55 on the daily time frame. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, we're still on the chart for AQST. It's flipped over to the weekly time frame, so I wanted to report to you folks on that as well. Here we can see that on the weekly basis, this also generated a TD9 top out here, as well as a Rhodes momentum indicator signal. So the TD9 top was confirmed the week of September 18th. The following week, that was last week, was the confirmation of the Rhodes momentum indicator top. Now, when price makes those tops, it says, okay, I'm going to move back to support. So where is support? Well, it had several different levels of support. The first level of support was Stevie's green line. Currently, that's priced at 704. Last week, price stopped basically right on that, and it held. This week, it's closed below that, below the bottom of its profile. And its last level, its last bastion of hope out here is $4.80. 480 is the TD9 breakout level. No idea whether this will hold or not, but if this does not hold, this is telling you you're headed all the way back to its lows. Looks like the all-time lows out there. So hope that helps you out. Let's spend the last minute or so here going back to the way we began the show. Give me a second to just get back to that my opening range charts out here. It's the NQ that we believe was going to give us the message, and it has given us the message. So you get the TD9 count pattern. We get the oscillator and change line, changes color, tells us that price and that line should catch up to each other. That's exactly what has transpired at 1:30 this afternoon. Because we have the test and rejection, because that line is green, we've seen price bounce off of that. It is back to its bullish ways. Now, when price pulled back during that 1 to 1:30 time frame, there was another TD9 count that was trying to form. That has now been negated. And what that says, folks, at least with regard to the NQ out here, very bullish. Other than an A to B equals CD pattern to the upside, that 30-minute chart is saying it wants to continue to move higher. Again, come the end of the day, for the NQ specifically, 11,450.75. If price closes above that, please don't be short. The ES mini, if price closes above 33.53, please don't be short. Inside the Dow, if price closes above 27,513, please don't be short. That's the message coming from the charts. But stay tuned for 2 more great hours, folks, and have a wonderful Wednesday. We'll see you tomorrow. Take care.